Good morning, good evening, good afternoon, everyone, wherever you're watching from. This is another epic video on BTC review coming from the WTA community. And today we want to review BTC USDT and generally what you should expect from the market from a technical perspective. So, from our last video, you got the whole prediction that market is going to see as low as $36,000 for the upcoming moves, and that is exactly where we are now. So now this new video is probably going to be talking about um, where we should expect the market next and why are we here. So first of all, I'll be discussing why are we here. Did we see this coming? Yes, we did. We did because there's a video that was dropped I think a few days ago that actually spoke about this drop, and there has been a series of videos, okay, with unbiased mind. Why I use that word unbiased is because sometimes when you tend to analyze, you want to analyze because you want people to feel good about the market, so you try to bias your analysis. Okay, I commend Sadiq for that because he was very blunt and unbiased to speak about the market direction. Okay, now what I want to show you here is this. First of all, the market has always shown this idea of going down for a long period of time now. Starting from here, what you can see is that I'm going to backplay the chart. What you can see from here is that the last higher low on this chart was at this place. So the moment the market break below this last higher low, that was when the signal for a downward trend was shown by the market from the daily time frame perspective. So what you are supposed to wait for after this downward trend signal is to wait for, right, a new high lower low to be created, and that is exactly what the market did here. The market created a new lower low from here, and that was when I got it that right, we're in a downward trend market. But the only reason why I was still optimistic about switching back to an upward trend was because of the weekly time frame. Okay, so now looking at the weekly time frame, what I saw was that the weekly time frame is still in an upward trend because it's still creating higher highs and higher low, and this is the last higher high here. So I was hoping that the market is going to come back from the weekly to create a new higher low that will take the market upward. And this was why I shut off for weeks, because the daily trend was in a downward trend and the weekly was still showing an upward trend. So I have to wait till the daily switch back to an upward trend before I um change my bias about the total, before I make my bias about the market, because these two higher time frame trends that mostly control the market are not on the same direction. So I had to wait until both of them are trending on the same direction. So now, in my point of waiting, I kept watching on the daily time frame, and this is what we got. On the daily time frame, this is what we got. Now we keep printing lower highs and lower lows, lower highs and lower lows, and I was waiting for market to take out at least one of these lower highs. Okay, what you have here is a lower high. This is a lower high, and this is a new lower low formed here. Okay, and this is why I did not want to give any bias about the market. And as you can see, the market keep printing this lower high and lower low. Okay, so we have a new retracement here. A new lower high was formed here. A new lower high was formed here, and then what happened thereafter? Another lower high has been formed again. So now this is the reason. Okay, the last lower high here, sorry, on this chart was here. That was from on the 1st of January. Okay, now what I was expecting was I was expecting market to come above this lower high, okay, until the daily time frame breaks a valid lower high on this chart. That is where we tend to say the daily time frame has switched up to an upward trend. So starting from where the trend changed, it has kept obeying the downward trend structure. And what is a downward trend structure? In a downward trend, what you observe or what you see in the market is lower highs and lower low, lower highs and lower low. So this is a lower low here, and then a lower high, a lower high here that created this new lower low, and then this is the last lower high right here now. So now from this perspective, we will keep going bearish until the daily time frame change and give us a bullish bias. Now the next bullish bias for this daily time frame is when you see the market trading above 43,500. Then that means the last lower high on the daily chart has been broken and the market has switched back to an upward trend bias. Meanwhile, going back to the what's it called, weekly time frame that was keeping us in this bullish bias, you can see now that the weekly time frame has already changed in trend, because on the weekly time frame, this was the last higher low, right? That kept pushing the market upward. So what we're expecting, like I said, is a pushback to create a new higher low somewhere around here to go back up, but that failed. You saw the rejection, but it failed to go back up to create a new higher high. Rather, it took out the last higher low here, which is this place is the last higher low. The market took out the last higher low here, telling you now that officially the weekly time frame is now in a downward trend, same as the daily time frame. And what was I waiting for? I was waiting for the daily time frame to co-tally with the weekly time frame. But rather, what happened now is that the weekly had to come and tally with the daily. So the weekly switched to the downward trend instead of being an upward trend. So both weekly, daily, and now in a downward trend officially, which are the higher time frame perspective, higher time frame I make use of for my bigger picture biased. And now, looking from SMC's perspective, the trend has changed. That's market structure mapping I just showed. The trend has changed officially from the weekly and daily to a downward trend. So we are officially in a downward trend, whether you like it or not. Now, from the perspective of SMC, the current zone where the market is approaching has a lot of liquidity lying just below it. And that is why I have so much fear for this particular zone, because it has a lot of liquidity just below the zone. And now what is this zone? Now why is market even coming down as far as this? Okay, now I will explain from the weekly chart. Now, what happened here? Um, just from the past, what happened here was that market took off. After this dip here, market created a whole lot of liquidity around this zone. After creating this liquidity around this zone, right, the market came back and took out this entire liquidity. What is liquidity? Liquidity is simply market tapping into a particular level, making it seem like a very valid support and resistance because it has tapped into it over a period of time and then coming back to take out the stop losses below that structural level. So now what the market did was, after creating this liquidity level, it came down and pierced below the support level, kicking out some stop loss, and that is liquidity grab. And immediately the market tapped into this liquidity, the market blasts back to the upper side after a retest, blast back to the upper side, retest, and push massively to the upper side. Now, during this massive push to the upper side, something happened, and that's what I want you to see. Something happened. During this massive push to the upper side, market created imbalances. The market created imbalances. And where are that imbalance? And what do I mean by imbalance? Now, for every move in the market, the candles that are inside our market should be interwoven. So when we say interwoven, I'm talking about this candle, and this candle, they are linked. How are they linked? If you draw a line connecting this candle, try to connect this candle with this one, you see they touch. So they are what? They are balanced candle. But when you look down below here, if you try to check between this candle, and this one, they are not interwoven. So if you check this, you see, it did not touch the third candle above here. So this is an imbalance created around 30,000 to 35,000 region, and the market will definitely want to come back and feel it. We definitely want to come back and feel it. So during this era of movement, I was expecting market on this retest to come back and feel it so that the market will have enough reason to go back up. But what happened? The market did not successfully come back to feel it. This is exactly what happened. The market did not feel it, because feeling it means the market has to cover this entire gap that is remaining here. This entire gap, it has to fill this entire gap. So market did not tap into this gap. As you can see, Market did not tap into this gap. Rather, we blast to the upper side. And also at this region, market created another gap again between these three candles. These are the informations in the chart people don't see. Okay, now this is another gap which we call the market inefficiency or imbalances. So now the market also created a gap here, which means the market has to come back and fill in this gap. And that's exactly what the market did. It filled in this first gap. You see, immediately it filled in the entire gap here between this candle, it had a rejection fast. Then guess what? Immediately after that rejection, the market has to remember that there's another gap down below here that needs to be filled. That needs to be filled. Like it or not, the market is configured to move in a structural way that is balanced. Every candle has to be balanced in the market. Market is not coincidental. I keep saying this. The market is scripted. Whatever is going to happen in this market has been known by those that have the top hand to control the market. Okay, and these are the institutes and the big banks. We keep saying this. So now, what happened? The market remember that there's another imbalance, and that's exactly why it refused to go back up. Rather, it will come down to go and fill that imbalance. It does not matter how long it's going to take. And now what can you see? The market is currently filling the entire imbalance. Just a little gap remaining. And that's just the whole picture behind this feeling of the whole picture behind this whole dump that you are seeing. There are imbalances below that the market need to fill before taking off. That is one of my standpoints. That is one of my view, and that is one thing I want you to take note of. That whatever that is happening now in the market, whatever dump you are seeing now in the market, is not coincidental, or it is not a bad omen to the market. It is needed. It is even much needed for something like this to happen in the market, for us to be in a healthy market. Okay, let's use a layman perspective. If you want to catapult a stone to a very far destination, right? You have to drag the whatever the catapult backward with excess force. Okay, the more you push it backward, the more the stone is going to project, right? The more you catapult the stone backward, the more it's going to project forward. So the same thing happened in this market. The more the retracement, because retracement are for discount reasons. So whenever a market retrace, it is giving discount and giving interest, bringing interest into the market from investors. Okay, for investors to come in. So the more market dump to give us this interest and discount rate, the more people will come into the market and pump in money to make it buy. Now, if we follow this imbalance idea, before I share my other view about the market, if we follow this imbalance idea, checking on the monthly time frame, which is the highest time frame here, what you can see is that the chart is currently forming an emu pattern. Okay, I saw this emu pattern coming, but then I had a structure at this red candle as of then. So I was saying that I'll wait for market to go below this structure first before I can know if this M is going to hold or not. And now what we have seen is market has closed below this structure. This is a structure here because this is the last pullback that took out the higher high here before market started retracing. So it is expected that market should obey this structural level and push back up. But what has happened here, guys? Market has failed to obey it, and now we are trading below it. So the worst case is even going to be if this monthly candle closed below it. Now we can't even conclude on the monthly candle chart yet until this candle close. If it closed exactly where it is now as of 30th of this month or 31st, January is 31st, right? So if this candle close below this structure, automatically, weekly, monthly, daily, they are now in a downtrend. You can't change it. You can't change it because the chart is speaking the obvious. You can't change it. It's a fact. Okay, you keep seeing me having an alert here. Okay, look at the alert I have here. I have an alert here since I think almost how many weeks now. I set an alert here. Okay, it says once BTC cross 48,005, then we are bullish. That is, if this monthly candle comes up and close above this structural level it has break below, by closing above, we'll say, okay, the week, it was just a week out, okay, to clear out liquidity, okay, then it come back. So, but if it's closed below, well, welcome to a very bearish market. And if that happens, the weekly target, I mean, the monthly target from this chart is going to be down. It's funny, but that's it. Down below here. Why is it down below here? If you remember what we discussed imbalance. Trust me, the market is always balanced. If it is not balanced, the market will definitely come back to balance that shit. Okay? The market will always come back to balance every single candles in the charts. I will show you that from the past. Every single candle in the chart has always been balanced, be it on the monthly time frame, being on the weekly. I will show you from the past of BTC. I will show you from the past. Okay, so now if you look here, you see that during the takeoff of 2020, that took BTC from $10,000 to $60,000 in 2021, you will discover that there are imbalances. From what I explained, I said if three candles in the chart are not connected, these are imbalance. So this candle to this third candle, they are not connected. You see, they are not connected. So I have to connect it. So the gap between them is an imbalance. Now look down here. This candle and this last candle, they are not connected. So the gap between them is imbalance. So the market will definitely come back to fill these imbalances. The problem about the market is that we don't know when, but we know it will happen. We don't know when it will happen. We know it will happen, and we know exactly what to do when it happens. That is why you stand by and wait for it to happen before you do what you have to do. So now I know this imbalance has to be filled. Whether BTC go to 100K from here, I don't care. This imbalance has to be filled. I will still tell you it will come back from 100K and come down here. It's funny, but very, very, very possible. Over possible. Okay. So now this is the reason why I have been waiting, because I know there are imbalance down here, and I don't want to jump into the whole idea of bullish, bullish, bullish because everybody is shouting $100,000. And mind you, in the crypto market or in any financial market, whatever that is too, anticipated, always get hard to come by. Just the same way we anticipated Doge at $1, and here we are today. Also, take note that most of these fundamentals are created to lure you into the market. So when you hear this person purchase BTC, this one did this one did that, that doesn't mean BTC has to be bullish all the time. So the fact is that sometimes when they say BTC, somebody purchased BTC, one news, one fundamental about BTC, and all of a sudden the BTC start going bullish, or a particular coin start going bullish. These fundamentals are created parabolically in such a way that sometimes they work and sometimes they don't work, because if they don't work all the time, you are going to give up on fundamental. They have to make you believe in that system of fundamentals so that they can be using it against you. This is why when they want to take profit out of their trade, they will tell you that they have purchased a particular coin so that you will come in and try to buy that coin. By buying that coin, they have created enough liquidity on the demand side, so they will liquidate the demands by selling off to the demands. So ask yourself this question: if you have enough to sell off and you need to sell off, won't you do something extraordinary to make people buy from you? You have to convince people to buy from you. And the only way to convince people to buy from you is to make them see reasons to buy, that this thing is going to do well, this thing is going to do well. So these are why these fundamentals are sometimes created, and you see they go against you. So from this chart, in perspective, this is an MO pattern, and you know what an MO pattern looks like. An MO pattern most times always end up like this. An MO pattern always end up like this, breaking the neck of this M, retesting it, and the dump. And that is exactly what I'm expecting. It is funny, but this is what I'm expecting. So, but before this, we will still be hoping that this support is going to reject the market upward. And why are we hoping the support is going to reject this market upward? Why? Because there is an order block around this particular zone of takeoff here. Order block plus the imbalance I mentioned here that has been filled. So once market fill the entire imbalance, the market will tap into this order block candle, and by tapping into this order block candle, that is when we want to look for a buy entry from here, hoping that the market will be saved from here, hoping that the whales will come in from here, hoping that the market will revive from here. So when we take an order from here now, I will be taking an order from half of this candle. The middle of this order block candle is 33,000. Okay, so I'll be taking a buy order from 33K with my stop loss just at $28,000. Anything that makes this stop loss take me out, that's 14% risk. So you are not risking much. So you can place a buy here on spot and then target your 100K. That is not a bad idea. Target $100,000, which is like target $100,000, which is like 200%. Risking 40% for 200% is worth it. So, but if this trade takes you out, don't even try to buy again. Make sure you have the stop loss. If this trade takes you out, your next order should be at $12,000. I'm sorry. Your next order should be at $12,000. I've said this, and that is my bias. And now let's look at the last point of view why this whole perspective, or why I am expecting these whole moves from the market. Okay, just before the last point of view, now this is another liquidity level. Why are we calling it liquidity level? A liquidity level, like I said, is a particular support or resistance that the market has been obeying over a period of time repeatedly. So because of this, if you look at this place, this is a support level that the market has been bouncing off of. So because of this, a lot of traders in the world will be banking on this support. So if market comes around this support, everybody will be buying. Everybody right now will be buying. And now if everybody is buying in the market, it is not healthy for every market, be it crypto, be it stock, be it forex. Whenever everybody is buying, whenever everybody is seeing the same thing in the market, it is not healthy for the market. The market is not going to have enough liquidity. Because if you are buying and buying, then who is going to sell to us? Who is going to sell to the institute? This is why you need to think smart. You are buying and buying. Who is now? Who are we buying for? Now, because we are buying and everybody is buying, there has to be liquidity. So this is where the liquidity provider comes in. So whenever you see this dump and all of that, it is necessary, because without them, the market cannot run. So I am of the expectation that this call I am making here is even risky. This buy entry I'm making here is risky because it lies just above, below a liquidity. The entry lies above a liquidity. A liquidity is below the entry here. So this liquidity means a lot of people that are going to buy here, including us that are currently trying to buy here now, where are we putting our stop loss? We are buying here and we are putting our stop loss just below the liquidity. That is why we call it a liquidity zone. A place where a lot of traders are going to set their stop losses at is a liquidity zone. So now, because of this, how are the market makers or the liquidity provider going to make use of this and utilize it properly? What they are going to do is to tap into our stop losses. Remember, when you buy an asset and the market tap into your stop losses, it means that you have automatically sell back to the market. So by tapping into your stop loss, the market has forced people to sell off. So they have forced what is it called, supply to the market. That is liquidity inducement. They have induced supply into the market. Okay, so now this is the only way to outrun the market as far as pushing from here to 100K is concerned. Market has to tap into liquidity. Because markets right now, me and you know everybody is buying right now. Because both those are using indicator. Their indicator is telling them buy. This is my EMA here, telling me a buy entry. This is a support. Those are you support and I say buying. I am using SMC. SMC is saying I should buy from here because this is another block candle that broke structure to the opposite. So it's a very valid one. So whenever you see a point of interest that almost every trader in the world is interested in, be fearful of that point of interest. I'm teaching you this today. Be fearful of that point of interest, because these are the kind of interest points the market makers need to use as a point to suck liquidity from. Because whenever there's no liquidity in the market cannot move. You can't buy until there's somebody selling. You can't sell until there's somebody buying. Think about it. So this is the reason why I have to keep my stop loss very tight, even if I'm taking this risky trade. And this is the reason why I am of the bias that this 12K will come by. Will come by. I didn't say may. Will come by. Okay, so now this is my bias about the market. And the last, which I wanted to discuss before I divert to this liquidity idea, the last thing I want you to see was what I was discussing with the team yesterday in the community about the market cycle. Like it or not, markets, especially crypto markets, have a cycle that it keeps repeating, which is history tends to repeat itself. Now, I said something about the monthly and how market always come back to fill imbalances. Every drop you see in the market has a reason. Now, watch. Let me prove that to you. During the move 2017 till 2018 that took BTC from $4,000 to 20, I mean $20,000. Look at what happened. There were imbalances created. I told you about imbalance when there is a gap between three candles. So this is a gap here between this candle. This is a gap between this first and this third candle here. So you measure this is a gap. So the gap was created here. Now this is the exact reason why market has to come back down. Guess what happened? Market came back down to tap into this imbalance, fill it here. It filled it one. It wanted to go up. You remember there's another imbalance down here. It came back again and tap into it and fill the entire imbalance. Right, right. Okay, now after filling this entire imbalance, the market blast up again from $3,000 to $13,000. During the blast off, watch, this is funny. During the blast to the upper side, the market created another imbalance again here. This is not a joke, guys. This is not a joke. Watch what the market did. The market came back, tap into the exact imbalance and fill it again before blasting up. This is not a joke. Trust me. So this is a cycle that has been repeating itself. One, two. Imbalance created after a long movement, imbalance field. Imbalance created, imbalance field. Now imbalance has been created. Why are you not saying imbalance should not be filled? Why? Now the last and not the least I want to discuss is the percentage differentials. Now measure what happened. Measure what happened. Bitcoin dump from here. It took for Bitcoin, it took Bitcoin from 20K to exactly $3,000, which is 84% dump. It took this move before BTC was able to move again from here. It took this dump, it took a dump of 84% to push BTC by 1,500%. It took a momentum dump of 84% to project or catapult the market by 1,500%. So now let's repeat this cycle. Let's repeat this cycle, guys. Watch. Another 84% from the all-time high. Watch. Is this current zone 84%? No, it's 49. This is 84%. These are not coincidental. Whatever I'm saying here is not coincidental. Now, watch the exact 84% replicating the cycle of 2018 dump. It's exactly at 10K, 12K region, guys. This is not funny. So if it took Bitcoin 84% dump to give us 100 and 1,500% pump, then if you're expecting BTC to go to $100,000, you should expect I don't know if you get this whole perspective. I don't know. If it took 100 men to fight 1,500 men in the past 2 years, and now the war is here again, it will take the same 100 men again to fight the same 1,500 men. So now let's measure from here to 100K, how many percent? You'll be shocked. Now from here to 100K, that's another 844%. Which means if you are taking another 1,500% from here, you'll be talking about 160 and 180. This is the market cycle, guys. So you don't just expect a market to be sprinting upward forever. And that is why if you look at the stock market itself too, NASDAQ, it is about to repeat another history on its own again. It is about to repeat the same history on its own. Where is the history here? This is the past history dump here, and NASDAQ is about to repeat again. So this history here was like a 30% dump. And now looking at this place here, market has not dumped by 30% yet. So this is just 14%. So we need market down below here to give us 30%. And that is where NASDAQ is going to 11,500, guys. So this is a cycle. A market coming down to 12K is issues. You should even be happy if you're actually a technical analyst. You should be happy now that the market has fulfilled all righteousness. Because if market keep going up from here, I won't be happy. I'm not an enemy of progress, but that's the truth. Because if it's going up on me, I ain't know it will still come back here to fill in this imbalance. So why not just fill it now so that we'll be done? We will not have any business with 20K, with anything below 20K again. Once market fill this imbalance, we will not have any business with anything below 20K again. So this is not just a review, this is an eye opener. So for you to calm your mind, you make your decisions. Do you want to sell off, or do you want to follow the fact that even as of getting to 12K, 10K, whatever, it is even in a heady hand for market to go as far as that. So, but the only problem is it's going to injure a lot of altcoins. It's going to injure a lot of altcoins. Trust me, it's going to affect. It's only not going to affect people that are having just BTC. It's going to affect a lot of altcoins, a lot. Except the dump was a sharp one, just dump to 12K and reject immediately. Such like this one, the one here, it dumped and rejected immediately by how many percent? From here, this week, this 40% dump. So market rejected immediately that same month. It dumped by 40% around here and rejected backward. The revival of the market was faster. So revive immediately again by 72%. So that kind of move can be expected here. Because from this support now, if market should take out this support to tap into 20%, that's like to tap into 12%, that's like 60% dump. So you can tap into it by dumping 50% and reviving immediately to create a long week. That is very possible. That is not a bad idea. That is even for a healthy market. So this is my review about the market. I've been trying to make a video like this, but I don't want to offend anybody, but this is just it, guys. This is it. I have to be blunt. You can see the way I'm forcing the words out of my mouth. This is just it. And by the way, the M is so obvious. It's so obvious. It's so obvious. Now we are lying at the neck of the M, which is the support zone. So if this support zone is going to hold, perhaps it's not even going to last. I don't know. It might just push the market up like a pullback. Okay, this support is going to hold like this, put the market up like a pullback, and then we dump. I need this dump. It is heavy for us both. It is heavy for the market. Trust me, guys. It is heavy for the market. Officially, we are in a downward trend. Any kind of analysis you want to check in, we are in a downward trend. Trend line monthly weekly has broke structure to the downside. So we're in a downward trend. So when you break a trend line, you're expecting a retest the trend line and a dump. So what's up? We are in a downward trend, guys. Okay, that will be all for now, guys. Thank you very much. Let's keep our heads up. We'll be updating on BTC USDT once we tap into this region, because we'll now go to a lower time frame perspective and look for confirmation entry to see if this rejection is going to hold, so that we can make profit from here, both on spot and on futures. Because even from here, tapping up to this place is like 52%, which is still very important. So please learn to always use stop loss, even both on your spots and futures trade. Spot and futures trade, use stop losses. The idea is to cut your stop loss, to cut your losses short and let your profit run. If you don't cut your losses, you will hold them forever. Okay, that will be all, guys. Thank you for listening.